That is Andrew from Perth. Andrew, what's your question for Michelle and Daniel?
Well, I live in Australia, and most of my income is earned here. But I also have a consultancy overseas for which I earn $100 US a week, and it is taxed there at 30%. So I end up getting 70% of what I earn overseas. Now, shall I have to pay tax on the 70% that I receive here, or how shall I handle my tax in this case?
Well, that's quite a question from Andrew in Perth. Who'd like to take this one,
sure.
Michelle?
Essentially, what happens because you're an Australian resident for tax purposes, you get taxed on your worldwide income, so that would include the US consultancy fee. And what happens is that you get taxed actually on 100% of the income here at your Australian marginal tax rate, but then you get credit for the tax that you paid over in the US. So essentially what you do is you end up paying the difference, or you may get a refund depending upon what your marginal tax rate was at the time you lodge your return.
Okay, there you go. Andrew, I hope that helps. I'm sure it will. Okay, we do have another caller on the line, Nick from Geelong. Nick, what's your question for Michelle and Daniel?
Yes, hi. I'm a high-income earner, and my previous accountant advised me to open a company for my portfolio of $600,000-700,000. And I've done that. In light of what's happening lately in the market, I've lost a bit of money, like everybody else, I guess. Now, the first question is, can you set off the losses against dividend and income?
Sorry, Nick, could you just repeat that question?
Can you set off losses against dividend and income? Losses in the way of shares.
Okay, with a company.
With a company, yeah. Personal, I have a portfolio under my own name and a portfolio under my company.
Okay.
And in the portfolio in the company, are you doing that as a share trader, or are you doing that as a passive type of investor?
As a passive investor.
Okay, so the losses potentially in your company now are actually capital losses as opposed to revenue losses.
Yeah. Okay, so you can't offset them against the revenue.
So you won't be able to, no.
Okay, and against under my own name?
No, because the company and you are separate entities. And so if a company incurs a loss, it actually is trapped within the company and gets carried forward for the company to use in the future.
Yes, and under my own name?
If you have capital losses in your own name, the same rules apply. So unless you have a capital gain to offset that loss in this year or in future years, again, it gets carried forward until you have that event.
So I can't set it off against income or interest?
No, not capital losses, no.
All right. And off-market transfer, I've done a bit of off-market transfer just between the company and the name and my name. Is that a problem at all?
Only if they're not at commercial rates or market values, essentially. So if you're doing everything at arm's, treating it as an arm's length transaction. So if you were, trading with a third party, and that's the way you've done the pricing in terms of the transactions, then you shouldn't have a problem. If it's been done in a different way, then you may have some issues where you might have market substitution or other sort of rules applying. But I'd suggest, if you've got an accountant, that they should have looked at that when they've done those transactions.
Yeah, I've done that. It's apparently you could go back 3 months and you pick the price within 3 months.
Sorry, I missed that bit.
You can go back 3 months and you could pick a price within 3 months that you could do the off-market transfer.
Oh, you're talking about determining the value?
Yes.
Right.
Okay. All right, Nick, hope that helps. It sounds like you definitely need to see an accountant about all of that. It sounds like quite complicated things going on there. Now, just out of interest...